My name is Andres Restrepo. I'm the CEO of Mineros. I'm going to be really brief because we're hungry. Okay, so we're a company based in Colombia with operations in Nicaragua, Argentina, and Colombia, and an exploration project in Chile. This is our track record. In 2008, we set our goal to grow to 500,000 ounces. At that time, we were producing 100. This year, we'll be producing 300, so we're getting there. And with the acquisitions we've made in Nicaragua and Argentina, we're in the right track to reach the 500. We're listed in the Colombia Stock Exchange. This is our shareholder base. We have Colpatria Group and some financial institutions, pension funds, and family offices there. But the Colombia Stock Exchange is really liquid, and that has hurt our market cap. Our market cap is $180 million. $84 million when we generate more than $100 million in EBITDA every year. So we're planning to list in the TSX by the end of this year, and we hope for a re-rate. Our results in the past years were quite flat. We were in the area of 210,000 ounces, and our numbers were good but flat. In the first quarter of this year, we have incorporated Nicaragua and Argentina, and our numbers look much better. We're growing 54% in production, 49% in income, 28% in EBITDA, and 8% in net profit. This is only the first quarter. We're in the process of taking control of Gualcamayo, and there will be variations, but things are looking really good. Our share price is quite flat because of the lack of liquidity of the Colombia Stock Exchange, and that's the main reason we're listing the company in the TSX in this year. This is our mineral reserves and resources. So we're expecting an updated report in July this year, but with our report from 2017 and the last report from Yamana, we have around 1.3 million ounces in reserves and 5.4 ounces in resources. So we're looking good on that front. We're hoping to incorporate even more resources to our resource base, and we have a lot to do in the coming years to transform those resources into reserves. Our peer positioning in the stock market shows that even though we're producing a sound amount of ounces and have a very good all-in sustainable cash cost, sustainable cost, our P2 NAV is very low, so we think there is room for a re-rate. Let's look into our operations. In Colombia, we operate an alluvial mine. Usually there are two concerns about alluvial mining. One is environmental impact, and the other one is reliability. This is the way we take care of both of them. Coming to reliability, we operate our alluvial mine. We have operated it for 45 years. We operate it as an open pit. We do a lot of exploration. We have drilled our land every 50 meters, and we have in place a mining program. And our RE is over 95% for the past 10 years. So we recover more than 95% of what we plan. Coming to the environmental concerns, we don't operate connected to any river. We generate artificial ponds in the side of the river. We do all the dredging there, and then as our dredges move north, we undertake the closure and rehabilitation of the land. We have 45 small holdings because of that process. What we do is we level the land, we bring in families there, we pay them a salary for 5 to 7 years, and then they restore the land, and when the land is productive, we give it to them. So we have now 45 people producing in that land, and then that land is more productive than when we got there. We use only water for the process. We use no chemicals whatsoever. This is the process in the dredgers. We have five production systems in which we have bucket and suction dredgers. In the dredgers, we separate the alluvial bed, and we end up with rich sands that we fly by helicopter to our plant and do the final separation, and then what we get is gold that we smelt and sell. Our all-in is in the area of $700 per ounce, which is great, and we produce around 80 to 90 100,000 ounces in this fashion in Colombia. We have a consistent 11-year plan for each one of the production systems. So we have our alluvial beds completely explored and known. This is our plan for the coming years. We plan to maintain our production in the area of 100,000 ounces per year and a decreasing cash cost because we're going to close or sell a small underground operation we have in Colombia that is coming to the end of the life of mine. In Nicaragua, we bought an operation in 2013. We have 200,000 hectares there. We have a JV with Royal Road, and we're exploring those areas, finding for targets with more than 2 million ounces. But right now, we are operating in two fashions. We have artisanal miners there. By law, we have to work with them. Instead of thinking of that as a drag, we see it as an opportunity. We have organized them in co-ops. We're giving them safety procedures training. We're affiliating them to the social security system, and we pay them a good amount for their salaries, for their goals. So it's a win-win situation. At the same time, we're exploring and incorporating new reserves, and our goal is to bring the production in Nicaragua from the 100,000 ounces we are today to 160 in 2 or 3 days, and coming from the 75% artisanal, 25% our own production to 50-50. Our all-in sustaining cost is in the area of $1,100 US dollar per ounce. And this is how we will look in the coming years. Okay, so we want to move from 100 to 160, and we want to move from 75-25 to 50-50 from artisanal and our own gold. In Argentina, we bought Gualcamayo from Yamana. It's both an open pit and an underground operation. We bought it for $30 million because for them it was at the end of the life of mine. But only 20% of the land package has been explored. We're doing exploration in the area, in the near targets. It's looking good. We're doing exploration below the actual underground mine, and it also looks good. We have potential going deep with a program that we call DCP, Deep Carbonates Project, and we have potential in the near targets. This is the numbers of Argentina. The all-in is in the area of $900 per ounce, and the EBITDA margin is 35.6%. We bought it with this plan. They were closing the mine, but our plan is to maintain the actual operation in 100,000 ounces for the next 7 years, and in those 7 years develop the DCP project and ramp it up to 250. So with these 3 operations, we are able to reach 500,000 ounces in the next 6 to 7 years, and we're going to list the company in the TSX, and we also have a greenfield project in Chile called La Pepa. We have an earning option there. If we invest $20 million there, we will have 51% of the project. So the company is looking good. It has a good present and a very interesting future. We have a very strong sustainability agenda. Our ESG programs go beyond what we have to do by law. Each program is adapted to each country. In Colombia, we do a lot of planting of trees and recovering of land affected by our own mining and the illegal miners in the area. We produce honey, we plant rubber trees, we are rehabilitation social species as river turtles and fish. We have programs to promote human rights. We have a program called Investment for Taxes in Colombia, and we're investing heavily in infrastructure. In Bonanza, we're working with the local government in the development plans, and in Argentina, we're focusing on education and recreation. So why Mineros? Because we have positive cash flow, because we have an experienced management team. We have a proven track record of that management team. We're undervalued, and we're diversified in 3 countries. This is us, and this is it. Let's go have lunch.